Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, I'm Rohit from lifestylemastery.com, and today we have Harshil Mathur, who is founder of Razorpay, who has this distinction of being the second India-focused startup to have made it to the Y-Combinator accelerators program back in 2015. Razorpay has raised a total of $11 million from two funding rounds, with another undisclosed round closed this year in July, and counts among many others Mastercard, Tiger Global, Matrix Partners, and founders of InMobi, Snapdeal, Freecharge as investors. Harshil is an alumni of IIT Roorkee. Welcome to the show, Harshil.
Yeah, thanks, Rohit. Thanks for inviting me to the show. Really glad to be a part here.
So can you share your journey, why you started Razorpay, and how did you go about solving this problem?
Sure. So Razorpay started almost 3 years ago. Me and my co-founder we both were graduates of IIT Roorkee, and we were working in our jobs. So my co-founder was working in Microsoft in US. I was in Schlumberger in India. And while doing our jobs, we used to work on a lot of side projects in our pastime. For one of our side projects, we wanted to accept payments in India. And that's when we saw how difficult it is for a startup and a research company to accept payments, because it required a lot of paperwork, a lot of approval process, a lot of things to get started, and proper office setup and a lot of those things. And we thought to ourselves, like, most startups start like us. And that is the phase when a lot of new startups are coming in. And we thought that, like, most startups start like this. How can every startup satisfy all of these criteria? The second thing is the technology layer that was available to us after getting all of those through was very subpar compared to the rest of the world. And again, the basic thought was that when things are so much better in Western countries, why would India should lag so behind? So we started researching and diving deep into why things are the way they are and what can be done to improve it. So we read through the RBI regulations and a bunch of things, and we went and read online reviews by various folks who were using digital payment systems. And we thought that almost everyone had similar issues, while there was nothing particularly stopping it from the regulation standpoint. So that's how the original idea came out. Of course, we started meeting bankers and figuring out what can we build around it. We also started meeting a couple of potential customers to figure out what would their requirements be if somebody were to come and change this. And the Indian payment ecosystem was pretty monopolistic at that point, and that maybe there's something we can do. So we built the first beta, which solved the base problems. That it provided instant onboarding, it provided a digital onboarding platform, no physical paperwork was required. We provide a very simple set of API integration, which the 2 lines of code, the merchant could go live and start accepting payments, and started receiving good traction on it. And that's how the journey began, and we pushed further from there.
How did you get into Y-Combinator, and why did you choose to be a part of Y-Combinator Accelerator program?
Yeah, so Y-Combinator, we both used to follow Hacker News from college days, and we were really inspired by Paul Graham's essays on how a company should be built and various things on how a business should be done. So we knew Paul Graham, from Hacker News, and when we knew the kind of companies that YC had incubated. So YC was a no-brainer. From our end, we really aspired to be a part of YC because we really looked up to the companies they have built and mentored, and especially the kind of mentors they have. While we were building a startup, we saw the YC application process opened up, and we thought that why not just try for it? We didn't really expect a lot that we'll get in, because the chances of getting into YC are pretty low, especially for somebody building a company out of India, because before us, only one India-focused company would have ever gone to YC. And we were pre-revenue, so we hadn't really revenue at that point. So we didn't know we'll get in, but we just attempted it. Thankfully, we got in. So once we got in, there's a no-brainer that we, of course, wanted to be a part of it. And YC really changed the way we looked at business and the way we were building a startup, because the perspectives that we got working out of Silicon Valley and getting mentored by Paul Graham and Paul Buchheit and a lot of those folks really changed our viewpoint on how we can scale Razorpay up faster.
What are the real things you learned from Y-Combinator, and are they still mentoring you, or is it just a program for a couple of months where they handhold you?
First is, I think a lot of people miss out that YC is not just a 3-month period. YC is, once you're part of YC, you're part of YC for lifetime. They are your investors, they are shareholding with you. So they are with you for long. So even after we got out of YC, we still have chats with them probably once in a couple of months, just to run by the ideas that we are focusing on and by our strategy, and see. They're a very good sounding board for a lot of advices, and they still continue to be very helpful. Secondly, I think based on the learnings that we had during those 3 months period, I think there are a lot of learnings. It's difficult to put them down, but the major advantages of YC were, first, of course, the mentorship that we got, non-product aspects, like how to build a sales team, how to hire the right set of employees, what to look for the first hires, how to scale up your initial customers? Or so those are the kind of answers that they helped us sort out for. And basically, what are the major things to focus on? Because when you're starting out a business, there's so many things to do. So what are the primary things that you should focus on? That is something that YC advises really well. The second advice that you get is around how to deal with fundraising and investment process. Because for most first-time founders like us, I mean, we really didn't know how fundraising works, what to talk to investor, what excites them, what might disinterest them, and things like that. So YC really helps you kind of understand that because they have been doing it for very long. They also help you avoid the pitfalls. So if there's an investor and there are some off weird terms or weird discussions happening, you can always run by with YC and they can help you navigate through that. The third help that you get for YC is through the network of alumni that they have. So the kind of alumni network that they have built over the years, it's really helpful. So especially if you're doing a US startup, of course, it's very helpful. But even for companies like us, like I remember one time we wanted to get connected to Shopify, so to get integrated into their platform. So I dropped a mail in the YC alumni network and somebody connected us directly to the CPO of Shopify, and through that we got an entry. So the power of alumni is like unbeaten. You want to get connected to any company in the US or Europe or Canada, and you just drop a mail and somebody would come back and connect you with like one of the tech guys or lead guys there. That's the power of YC alumni that you get. A lot of companies which were part of our batch got some of their early customers from YC alumni and large YC alumni because of the connects they could get. And the last part is, of course, it's a brand in itself. It's a tag that you get. So if you are a YC company, of course, investors look at you differently, customers look at you differently, partners look at you differently. So it's a seal of approval. And there's no denying that when you go for a fundraise and if investors know that you're a YC company, of course, the chances of there being attention to you increase. I'm not saying that every YC company just gets funding easily. Fundraise process still remains the same. It's just that you drop a mail and you most probably get a reply. So at least you get a meeting. The rest of it depends up from there.
You also got Mastercard to invest into Razorpay. So why did that happen? And do you think there's any conflict of interest with Mastercard had invested into your company?
No, I think while we were scaling up, we started working closely with Mastercard anyway because we work on a payments layer, and Mastercard and Visa are the ones who have built the core payment layer globally. So we started working with them, and we were doing a lot of things. We ran by our ideas to a lot of their senior leadership. Some of them really liked it, and they asked us, "Why don't you talk to our strategy team and figure out if we can do some sort of a investment as well?" And we were pretty open to it. So I think the major advantage of getting Mastercard to invest is, first of all, having a deeper relationship with Mastercard in the sense that they already work with almost every bank in the country. So through their help, we could get connected to the banks and build new products working with those banks. The second thing is they have a lot of knowledge base on how to handle payments, how to handle fraud, how to handle risk, and all of those things. So we got an entry into that knowledge base. We could talk to their risk and their compliance side, figure out how they look at the market, what kind of issues they see in the market, and how we could go ahead and fix them. And the third thing is when we want to go international, Mastercard, through it connects globally, can help us get connected to banks in other countries as well easily and get an entry and a foot in the door really easily. From their standpoint, what they were looking at is that the Indian fintech ecosystem was heating up. They wanted to be a part of it, and they saw the kind of things that we were doing. Our core focus was payment gateway, which is kind of enables a network to get a deeper penetration into the market itself. So they wanted to work closely with us, and an investment into us also strategically aligned them to help us grow faster. So that's how it came out. I think there was no issue of conflict of interest and that's the reason we didn't take any from the bank, because we don't really compete or in any way or go against Mastercard. Our goal is to increase the digital payment ecosystem, and Mastercard is a core part of it. So if we succeed or we increase the digital payment ecosystem, Mastercard and Visa both anyways get a benefit out of it, whether they invest in us or not.
You have competitors like Paytm, MobiKwik, PayU in India. So, how are you different from your competitors?
First of all, we are not a wallet, so we don't directly compete with Paytm and MobiKwik. So they mostly consumer brands. They target onboarding and end consumer. While for us, consumer is not even cannot be a customer in any way. So for us, end customer is a business. A consumer has to use a business that works with Razorpay to actually use Razorpay. And more often than not, consumer doesn't even care whether Razorpay is present. So our focus is businesses, and what we do and a lot of things that we do essentially that revolve around easing the business's life of accepting digital payment. So while a business might have to go to each of these wallet guys separately, and the bank separately, and then the NPCI for getting UPI separately, what we essentially do is we provide a layer where a business can connect to us, and we accept all the different instruments under one single channel. So whether it's cards, whether it's net banking, whether it's wallets, whether it's UPI, whether it's EMI, they just connect with us, and we get them access to all the different layers under one single channel. And that's our pitch to the merchant, is that you work with us and we'll ensure that you get every form of acceptance that you want. Which really excites them, because the business right now doesn't really care how the consumer pays. What they essentially want is a consumer to pay with respect to the instrument. And that's what we enable for them.
How's your service priced for businesses out here in India?
It is priced competitively, but we keep ourselves a little premium offering compared to rest of the market, because we really believe that we have a product-first company, and we really believe that our product excels a lot compared to everyone else in the market, and we deserve to charge a little premium for it. It also ensures that we have enough incentive to continuously improve on the product and drive more innovation on it. So far, we haven't faced much issues because of it, because our focus pitch to the merchant is that if you start working with us and it increases your business, then the difference in price is very insignificant to really counter that. And that has been working for us.
How many merchants do you service, and what's your monthly volumes?
So we service about 55,000 merchants at this scale right now. We don't disclose the monthly volumes, but I think in the last 1 year, our volumes have grown more than 20 times. In fact, on an average, we are growing about 50% month over month.
Retaining quality talent in India has become a little difficult. So what are your thoughts on retaining quality talent, and how talent is important for a startup like yours?
So I think on the talent front, we have always focused on ensuring that we provide a very open and transparent place to work with. It's a pretty young startup, and most folks are millennials. And what we have focused on is increasingly is providing a very good culture to work with, a very good team to work with. And I think more than compensation, I think that's what makes engineers stick around longer in our company. Our attrition rate has been really low, especially on the engineering side, and primarily because we focused a lot on creating a right work culture. At the same time, empowering people and giving them a growth path internally is increasingly important. So we ensure that the millennials who come work with us from start, they get a good growth path, they grow up rapidly in their jobs. They continuously see the next thing that they want to do internally in the organization. I think the most common reason, compensation is one side, but most common reasons we see for people actually leaving is either the work culture or the growth that they see in the organization. As long as you solve both of those out, we see people stick around much longer.
How much money have you raised till now, and are you still looking to raise more money?
We raised a total of $11.5 million in the last 2 years. We'll be closing another round soon, and we should see some announcement early next year.
Last 2 years, there's been a lot of talk about cryptocurrency, Bitcoin, Ethereum. This sort of a topic has really heated up. So what is your take on that, and what is your views on FinTech in India?
So in cryptocurrency, so first of all, there's an underlying technology, blockchain. Almost everyone believes that blockchain as a technology layer will definitely change a lot of things, especially in the finance domain. And I fundamentally believe that blockchain, especially in countries like India, where trust is a big problem, blockchain kind of helps you solve the trust problem in a much more distributed, much better way. The second thing is looking at the cryptocurrency itself. It's still early stages. For sure, cryptocurrency will grow up rapidly, but will they be in the same form and shape as they are today? Because there are a lot of issues with the cryptocurrencies that are available today. So I think this is the first batch or first set of cryptocurrencies that have come out. Improvement next 2, 3, 4 years, we'll have the right cryptocurrency which works well globally. But till then, I think these are good early starts toward that. Overall, I'm very bullish that the cryptocurrency market will grow. I'm just not sure if the current set of cryptocurrencies are the ones which will survive, but cryptocurrency as a market will definitely survive.
What's your view about the FinTech space in India? A lot of money has been pumped into companies like Paytm, Quick. It's the new trend. So what is your take on that?
I think a fintech space, overall, increasingly people have realized that things like e-commerce or even cab aggregation, all of those things, they can be solved by global companies entering India and taking over the market, which has happened in a lot of these markets. But things like payments, taxation, and all of those things, these are very local problems. And increasingly people believe that local companies are the ones which will solve these problems much better. And that's why there's been a lot of money flowing into fintech, BFSI, and a lot of these sectors, because these are very local problems. And I think an Indian company will always be much better suited to solve them. A lot of things that have happened in the last 2 years, like demonetization, GST, and then recently the revision on the debit card rates and all of those things, have really pumped up the fintech market. And I believe that the government is really pushing the fintech ecosystem in the best way possible. I think the next couple of years will be very interesting, because the financial inclusion drive through demonetization and Jan Dhan Yojana has really brought a lot of people who were never part of the digital ecosystem into it. So I think in the next couple of years, we'll see how we can power those people who have just got included into the digital inclusion drive, how we can empower them and how we can use fintech to improve their lives.
Well, let's quickly do the top 3. What's your favorite business book?
I think I'll put two. One is founder. I really liked reading Founders at Work. I read it before starting Razorpay. So it's mostly a collection of interviews done by Jessica Livingston. But it's a really interesting book if you really want to start a company. From a business principle perspective, I think The Lean Startup is an interesting book for if somebody wants to build a startup. There's a very good guideline on what to focus on and what not to focus on.
If you could go back in time when you started Razorpay, what is the one thing you would have focused on?
Difficult to put it down in one thing, but I think getting good quality talent early on is really critical for the growth. So while we got good talent, I think we should have started hiring at least for the critical talent much early on. It helps you scale up faster if you have the right set of people working towards it. And by good talent, I don't mean more experienced talent, but basically more motivated talent who you can get early on and get them to run a couple of things that founders take up themselves early on.
Got it. And what's your favorite online tool, for example, Gmail or Slack?
I'll say Slack is kind of like the bloodline of Razorpay. I mean, every business discussions to all kind of alerts, to all kind of monitoring, to I think all kind of things right now for Razorpay happen over Slack. So it's a very transparent digital channel for all sort of discussions under one single umbrella. I think it's more like we use more like a company intranet, in the sense that everything is plugged into Slack, whether it's a sales number, whether it's merchant signups, whether it's a volume growth, everything is plugged into Slack. Whatever anyone wants can just go to Slack and get it from there. So I think the powerfulness of Slack is, I think it cannot be overemphasized for an organization like ours.
What is the best way people can reach out to you?
Over my email, harshil@razorpay.com, Harshil harshil@razorpay.com, I think. So anyone wants to reach out, it's the best way to reach me.
Thank you very much for coming onto the show, Harshil. I really appreciate it.
Thanks, Rohit. Thank you.
Thanks for listening to the Life Self-Mastery podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.